Good morning, everybody. If you can hear me, please let me know in the chat. I hope you guys have been doing well, right? Hope you have had a good week. I know me and my private community have had a pretty decent last couple months. If you've been here for any length of time in the last couple months, I hope you guys have learned some stuff, right? So we will see what's going on for today, because we have some interesting things that have happened. So we have an FOMC announcement, or one of their speakers, at 7:40. Right, next week should be pretty nice. Yeah. Well, all right. Sorry. Let me see. Make sure everything's working okay. All right. All right. Well, so we could see how the bond futures pretty much attacked the higher time frame level we've been eyeballing for the last couple weeks, damn near the whole month. Once we broke past this order block here, once we got above this high, right, we already figured that it was gonna give us some type of bounce to the upside, and obviously we have trusted that. We see that the midpoint of this order block held, right? It did dig pretty deep, barely closed below it, but once we got this candle, we were pretty confident that it was going to likely seek buy-side liquidity. And so yeah, blew past the order block, and then obviously it reached for our fair value gap up here. And again, we've been looking for that for a while. And what we do notice, what I've mentioned to my private community, is we have this S&T here, right? Higher high, lower high. So it's not unreasonable for us to anticipate this, giving us that little drop. Now, if we break through the midpoint of this order block here and close below it, then that could be significant, especially coming off the highs here, showing an S&T. That's suspect, to say the least. Then if we move up to, say, 2-week chart, we can see how there's this order block. If you were looking, you can see the fair value gap in here. So if we break through the midpoint of this order block I just showed you on this weekly chart, that is going to be suspect as well in terms of whether the bond futures are going to continue to rally or if they're going to continue to fall. I feel like we have not changed anything yet, like overall narrative wise. It just seems like we've responded off this fair value gap after taking buy side. So the order flow is still bullish, right? Still remaining bullish. So we have to see if this phenomenon is what it's going to want to do moving forward. So yeah, like I said, this retracement from these highs is not unreasonable. I mean, price doesn't go in one direction continuously. Because we've been so excited to the upside, this retracement is definitely permitted to do so. So with this coming lower, and the week being bullish, right? So again, what day is it, right? Each day has a place in the weekly range. When we have basically a weekly expansion that's very one-sided that hits a higher time frame PD array, it's pretty likely the price is going to give you that retracement before it decides to continue to run in the intended direction. All right, so it just goes back to the daily, weekly ranges. Very, very important aspect of things. So definitely check out my Power 3 series if you haven't and want to get some more insights into the details of that topic. But yeah, so with this retracing, right, with the yields rallying, that leads to bullish DXY, at least in the short term, and then obviously bearish indices in the short term, right? Now, if this was to continue and break through this, then obviously the order block I mentioned earlier, then that can obviously give us insights that we may be shifting sentiment and we may be witnessing a quarterly shift, right? But we don't jump to those conclusions, right? We have to see more evidence of that. By the way, like I said in the chat, can you guys hear me? Good? Showing me a little notification here on YouTube about something that has to do with the sound. So I just want to double check with you guys. So if you could tell me if it's coming through clear or not, it'd be much appreciated. So yeah, you can see this coming off the highs. You see how this declined, and you see how that's being influenced by the bonds, right? And then the yields rallying, right? That's given DXY the chance to come off the low from a logical level of support, right? It hit a bullish order block here. This is also a weekly fair value gap. Right, if you look here, we've been calling for this low to be taken out as well, right? We've been ahead of this the whole time. If you've been here for a while and really, really pay attention to the things that are noted and you keep them in your observations as we walk forward, you'll start to piece together the fact that everything that we analyze and, for the most part, assume comes to fruition, right? We're not perfect. Obviously, we'll get it wrong sometimes. But for the most part, even if we're wrong, we figure out why, but it's a pretty rare occurrence. Although it does happen, right? It does happen. This week also, in my private community, we actually had 2 days that were a bit harder to read because of the lack of symmetry in the markets, meaning the relationships, like, for example, the bonds and yields going, or the bonds going lower and the yields going higher, should lead to obviously aggressiveness in bullish DXY and heavy bearish indices. And it did happen, right? It did happen, but it was kind of laggy for a couple of days, right? And it was lacking symmetry, which kind of goes against the ability to trust things and have clarity and then full conviction behind a particular thing, right? But eventually things have kicked back in. If you follow me on Instagram, you did see the 200-point move that we called out and got ahead of yet again, and the 77% win rate one of my students has, which is amazing. But yeah, right? So yeah, just make sure you pay attention. And let's go double check the news one more time. So yeah, 7:40 is when we have the next news event. So because there's no news up until this point, we are going to want to wait till at least 6:30, like New York Open, so that we can get that feel for the manipulation. Because again, if you trade before the 6:30 open, you're trading inside of the manipulation for the most part, at least in many cases. right? So keep that in mind, because if you've had a long stretch, either from the last couple of weeks, from the last couple of years, whatever the case may be, and you feel like you get stopped out too early and the price goes in your direction, it has to do with you not understanding the manipulation and how the delivery in the daily and weekly ranges operates. So if you just keep that in mind and go look back to all the trades that you've taken before the 6:30 open, and if you can pull out an observation showing that you were taking losses there but your bias was right eventually, consider adding that rule, right? No trades get taken until after 6:30, and not even at exactly at 6:30, right? Look at the first macro, or the second macro, right? The second macro is the 650 to 710 macro, which goes into obviously the silver bullet time window, right? Just little adjustments like that can seriously help you out. So I hope you take, all the tips and things to heart, and at least try them, right? Try to make adjustments, because if nothing changes, nothing changes, okay? And, trading is all about making adjustments, having convictions behind your ideas, and just really learning to develop the trust in yourself. And part of that has to do with you building rules that can protect you, right? The rules are guardrails, because this is an unlimited environment. And if you have unlimited risks and you have unmanaged risk with no rules, then there's going to also be no rules or limit to how much you get decimated, and it's just unnecessary. We're not here to lose money, right? We're here to try to make money, right? Not financial advice, and there's no guarantees, right? But if you have rules and different things, it protects you. It protects you, and you won't get your head knocked off. All right, so you got to act as a professional. All right, so yeah, we will be looking for opportunities after 6:30, but we're going to dig into some information here. So again, we've came off the highs here with the indices. We could see that there was an SMT at the highs if we go to the daily chart, right? There's an SMT here. On June 16th, that was the new quarter. Notice how price rallied up to start the new quarter, took out and created new highs, right? All-time highs. And then now we've come off the highs and have reversed after we've been super bullish since April, right? So that's very interesting, because again, we may be observing a time where things have shifted, maybe given us a manipulation higher from a quarterly perspective, and then seeing price drop lower. So I got something very, very interesting I'm going to show you here, which most people completely ignore because they're so stuck on the 1 minute time frame. So if you understand power of 3, okay, and you know that it happens on every single time frame, even the yearly chart, even the monthly chart, even the 3-month chart, which is a quarterly chart. If you look at this idea here, like this whole price delivery, right? Let's go to the 3-month chart. Okay? Look at what's happened in this new quarter that started in June. Right? Price rallied up, created a high, and now it's coming lower. Right? So open, made a high for manipulation, and then now it's coming, or it's pretending to come lower. Right? At least for the time being, it's not cemented fully. But if we do end up seeing bearishness happen, right, for the rest of the quarter, and a quarterly shift does take place, you can visually see the quarterly power of 3, if that is what's going to take place. And for now, right, at least right now, it seems like that may become the mode of delivery. So if we can understand that the quarterly time frame, that this candle is potentially likely to be bearish, because of Power 3 understanding and the layered fundamentals and different things that we operate within, you will have narrative completely solidified. We have been bullish, and our narrative has been bullish for weeks, right? And for the most part, we have been on point given that narrative and navigating buys and sells inside of that bullish narrative, right? Going with the indices as they move higher, right? Knowing what the overall narrative is, like from a higher time frame perspective, not only gives you the ability to have clarity in terms of direction on a longer term basis, week to week, but it also helps you when you're trying to do day-to-day things, right? Like trying to navigate the day-to-day price action. Okay? Does that make sense? Yeah, again, if you could hear me, let me know in the chat. I really appreciate that. So yeah, like I said, think about Power 3. Think about what we just saw on the daily chart. Internalize this idea here. Look at the structure. Okay? So when price rallied up, if we go to the daily chart, you can see that open on June 16th, right, within that time window, price rallied up above the open price from the new quarter, which is June 16th, right when the new quarter started, 16th or 17th, and then rallied up from that. Now we have shifted market structure here and may be giving a bearish quarterly delivery, which is a quarterly shift. Okay, we can see that there's an SMT that formed at that high, right? And DXY has swept a significant low, right? The yields, the bonds are dropping, which is indicative of bearish indices potentially, right? And then we're starting to see SMT at the lows here, showcasing the fact that yields might be bullish. So with that being the case, again, that makes this observation from the quarterly perspective, this quarterly time frame, that makes this so much more meaningful, because now you can kind of understand or have like another piece to your analysis on your way to observing bias on a consistent basis that you can now add, and understand and internalize. Of course, you gotta do this a bunch of times, right? It may make sense here, but in the moment when you're by yourself, not listening to someone like me or anybody else, and you just have the man in the mirror, to be able to use these tools and trust them, you have to be able to have trust in yourself. You can build that trust by obviously shadowing someone like you guys are doing now, or just do a ton of back testing on your own, right? But obviously it's helpful to see somebody actually apply the stuff, So again, I hope all that makes sense, right? You can kind of see how Power 3 is just so important across the board. It works all the time, and it's happening all the time, right? So yeah. Again, guys, we're just going to be going over things right now. 6:30 is when the open price will happen, and then there should be manipulation that maybe within the 6:30 to 7:30 time we'll be able to maybe pull out an idea, right? But this is trading. Trading is patience, right? Trading is patience. It's not I'm in a rush to get a trade, because everybody trying to do that right now has already taken a loss, while we're over here preparing to catch headshots, which a lot of times we have been able to achieve. So yeah, I hope that quarterly observation makes sense. It's one of the time frames that majority of people don't even use. So again, if you don't want to be like everybody, you have to do things that everybody is unwilling to do. All right? So definitely keep that in consideration. You don't have to have the same time frames as everybody else. You'll find something that, maybe resonates with you, but that someone else doesn't use. Right? All right. So yeah, so based on everything that I said, how the quarter looks like it's pushing bearish. We've been bearish at least for the time being. I would not be surprised if we get this retracement higher to then go lower. So that's what I want to see. If I'm going to look to trade today, right now, because it's been so bearish, I don't anticipate it just sliding off, right? Because a lot of times they don't do that. The people that are in a rush, the people that have no patience, that have no idea how things operate, with no experience, and just want to get rich quick, they're going to be trying to get in so they don't supposedly miss the setup, right? You're not going to miss the setup. That's a dumb statement, right? Even worrying about missing a trade, you eventually find out with experience, as I have, that is just a stupid thing to think, right? Like, it's just ridiculous. Because there's so many opportunities. Like, most people have no clue that there's so much happening, and being on calls like this and consistently trying to listen or pick up information from traders that actually know what the hell's going on can prove a lot of things to you, versus you trying to figure out everything through hardship and getting beat up. You're going to have hardship regardless, right? But thinking that you're going to miss a setup is a waste of energy, because you are going to miss setups. It's undeniable, So you can't get mad about that. You will miss trades. We missed, I think, 3 trades this week, but guess what? We've smashed like 2 or 3 as well. Well, two nice trades we smashed, right? And we missed about three in my private community, right? So yeah, it's just part of the game. And this isn't like a regular job. Like, you can go weeks without taking a trade and making any money, but that one trade that you smack, that you've been plotting on for weeks, brings home the bacon. Okay? You hit a headshot on something, especially in NASDAQ with a regular E-mini contract. I mean, you're doing numbers. And you don't need to pull up a MetaTrader account and show 1,000 trades to make a full-time living. Again, this is not financial advice, and I don't guarantee nothing, as nobody else should, because it's unreasonable. But again, you don't need to worry about missing setups. That's a common thing that stresses people out. And in my private community, we really dig into breaking down the models and exactly why you don't need to worry about missing a setup, because there's so many opportunities. And I hope that when you're watching me be doing these live streams, I hope that you start to catch on as well, and see why. What's the reason, or how can I trust the fact there's going to be a bunch of moves? Because many traders can only find one setup a day, if that follows the rules that they are employing. But of course, that has to do with a lack of experience, obviously, and an untrained eye, right? But once you're able to see the things, it starts to dissipate. That stress, that, oh my gosh, like I'm worried, like I'm gonna miss a trade. All that stuff goes away. Oh, I took a loss, and this and that. All that stuff goes away because you're gonna miss trades. You're going to lose trades, but that doesn't matter. There's so many opportunities, so you just have to train yourself to see them. And I hope that you can start working towards that. And I hope this channel is an asset to you guys as well. And again, if you're interested, I have a private community. So if you want to see details about that, click the link below for those that want to have that more intimate environment. But yeah. So again, the bias I'm looking for today, because we've been so bearish, price has been one-sided. We've hit this liquidity pool. We've left like quadruple lows at this point. So obviously that could, in my opinion, be the draw on liquidity. But first, I would like to see us come up. If we can't reach up into this fair value gap, right? We do have this inversion fair value gap level, and we also have the midpoint of this wick. Isn't it ironic that the inversion fair value gap low is basically the midpoint of this up wick here that should act as a premium array? Okay, off the heels of SMT, off the heels of a possible continued draw on liquidity lower for the bonds to attack this low, and this trend line liquidity we've had outlined in my private community for the whole week, right? We could see that this rally up to drop is a bearish power 3 for the week, right? So clearly it's a bearish week here for the current week with the bonds. So that's interesting, right? And again, if you go to the quarterly time frame here, again, you can see the run higher, high was set, and now price is pulling lower. So this could end up turning into a bearish quarter because we've been super bullish. So it wouldn't be unreasonable for that to be the reality. Okay? Right? But of course, on a more near-term view, we could definitely retrace. Right? We've dropped lower. So it's not, again, unreasonable for price to want to run up to some type of premium. And that may just be the whole week right there. It may just rally up back into the weekly range. TGIF, we've already taken sell side liquidity. So if you go from the extreme high to the extreme low, if TGIF is to take place, we would anticipate anywhere from 20 to 30% retracement. And if you look here, that's in alignment with this midpoint of this up wick, which again, up wicks act as premium arrays in a bearish market, and down wicks in a bullish trend act as discount arrays, right? So just one of those observations. Mind you, every time you jump on these calls, you're going to hear things repeated over and over and over again, because if you don't see somebody having a consistent view and a consistent process, and if you yourself don't end up developing a consistent process and do consistently the same things over and over, how the hell are you going to look for consistency? Like, answer that question, right? Because people want to do so many things. They think things are random, all this nonsense. Like, let's look for a silver bullet, this and that. Like it has to be one way, blah, blah, blah. Like, dude, you have to have a consistent process, and it's going to be boring, right? So, some people are like, oh, it's always the same thing. Yes, it's always the same thing. It has to be. But how do you think the results are the same? How do you think, like, McDonald's has consistent business and doesn't worry about discrepancies in their income and different things? Because they have a process that works, and it's consistent. It's all the time repeatable, right? So I hope that spending time on these calls helps you see the repetitive process, at least, from a bird's eye view. And I hope it benefits you. And again, everything that we do here on this YouTube channel is completely amplified and dug deeply into in my private community for those of you that do want to have that type of experience. If you check on my Instagram, you could see at this point hundreds of testimonials from amazing students and real people, that just out of the kindness of their heart and the enjoyment of the experience and benefits they've received from the experience, have came out and been gracious enough to give me their honest review, of the things that we do. And it's because of those same students that I'm the mentor that I am today, that I know how to serve the way that I know how to serve and teach the way I know how to teach. It's because of their questions, their boldness to not sit silent and continuously ask questions. The students also deserve the credit for the mentor that I am today. And I hope that one day I can watch them thrive and even surpass me, possibly surpass ICT himself, right? The goal is to pull you guys up, to pull everybody up. There's no competition. I'm not better than this person or that person. I know what I'm doing, right? And I prove I know what I'm doing. And I'm very simplistic in the way I think, but I don't overlook the small details that make or break you as a trader. And I have a process that's very repeatable and very much customizable, right? So, again, I appreciate all my students that have come to me and put their trust in me, and not only invested in me, but invested in themselves, in a person that isn't flashy. I'm not here to flash my bank account and how successful I am, right? You just put 2 and 2 together, see how consistent I am, and you'll see. You see clearly, what's going on. Doesn't take a rocket scientist, okay? But yeah, again, we're gonna try to find some opportunities after 6:30. I hope that at least so far what we've discussed makes sense. And as we walk forward, obviously, what I'm looking for is this to run higher potentially, and then maybe have today act as a TGIF. So that would mean that the bias for today could potentially be bullish until we get up into these levels here and see kind of what's going to occur. Okay, if this continues to drop and then possibly target this, which I had pointed out all week, and the trend line liquidity as well in my private community, if that does get attacked, we also have this fair value gap as well, and we also have the previous week's low here, or the current Sunday low. So that's a pretty near-term liquidity pool, and it just looks like everything is in alignment with that, right? In this market being bearish, if we see the yields bullish, then we see some significant signals that bearish indices and bullish DXY will take place. All right. So that is my assumption with what I'm looking for. Plain and simple, right? Not a lot of moving parts. If you go from this high to that low, we can see how the candle is pulled up into that area here. So this can also lead us to think that, price may not do much, right? If it does show that it's going to be choppy and we see seek and destroy, or things just don't look like they're willing to move, then this could be an issue, right? Especially if we get closer to equilibrium. We're resting below it and below a couple of new week opening gaps, so that could be significant. But again, we have an S&T at the lows. We do have this 3-day fair value gap that's available. But we have to see what occurs here from this fair value gap. We do see what we assume in the DXY, which is potentially price using this to, rally itself up to this fair value gap. If we go look at this chart, we can also see how the currencies have also fallen in line with that retracement sentiment after hitting the buy side liquidity. Right, so we've came off the highs, so it could fill in the rest of this fair value gap. Honestly, if that's the case, that's confirmed further with how the bonds and yields are behaving. If the yields go higher and the bonds continue to go lower, reaching down for the fair value gap here. Notice how this came off the highs and it's retracing. If you flip to GBP and Euro, they're doing something very similar, right? So that just proves, yet again, how important and in sync or together the bond's influence has over the indices, right? How they're all kind of merged together, how they work together, right? So again, if you spend any time on these live calls, you will quickly start to see how important the bonds and yields are. Like, they are significantly important, and you don't want to be the trader that says, oh, I'm just going to trade one market and I'm just going to look at that market, because everything's connected. And if you want to build clarity and trust in a bias and know when to switch things or know what PDRAs are going to hold or not and why, then this is part of that process, right? It's understanding this intermarket relationship, and then obviously risk on, risk off principles, which is very important. And I could do a video about that if you guys need to. Just let me know. But risk on, risk off, right, is one of those very important factors. Again, so if any of you guys have questions, specific questions that you'd like me to do full videos about, obviously I can't break down every concept on every live stream every time. But if you do stumble across something that I say that you feel, or that I amplify, that's important, that you don't understand and you'd like me to amplify it, I will be more than happy to help you out and break down the topic in a video specifically catered to you. Just like how my whole mentorship community has been shaped in terms of, different topics and things by my students, I want my YouTube channel to be the same way, right? This YouTube channel is to serve you guys. I'm not here to try to be flashy. I'm not flashy. I could care less how people view my financial status, because they're not paying my bills. The skill set is what I like to make shown on full display, because you can put two and two together, like I said earlier, right? I want people that are serious about their career as a trader, as I am, as my students are, that aren't trying to be signal junkies, right? It's okay to come and try to watch for ideas and different things like that. There's nothing wrong with that, right? But my goal, my whole purpose here on YouTube and in my mentorship is to make people independent. I want people to hang out here because they want to hang out and hear the conversation, analyze and just hang out, right? This is a little family that we got going on, and it's growing every day, right? And I'm grateful to all the support I've had over the last couple of years. I just want to continue building relationships with you guys and helping you as much as I can. And that comes heavily on the back of, your guys' participation and what you guys need help with, because I could sit here and, break down everything the way I want to, but I need to know what stumbles you guys so I can help you, because, again, that's the whole purpose. I could be doing what I was doing at the start when I first hit profitability and just do things on my own, in my own little bubble, right? But times are rough, right? Things are getting crazy. And I feel, because I've been blessed to have this opportunity to be a trader and do this full time, and be able to explain it from a simplistic view without taking away from the context of things, because I'm a simple person, right? So being that I'm blessed with that, I've been blessed with that, I feel I'm obligated to serve you guys as I've been served by ICT, and I've been, given the ability to learn this, and I'm not special. I just dedicated my life to this. Once I fell in love with it, once I tasted it, like ICT says, once you're bit by the bug, you'll never be able to look at employment or financial gains or anything the same as you used to, because you can sit here on a chart, have this type of, time spent on a chart and make more than everyone in your family. You can make more than everybody that you've ever met just by sitting here and learning the skill set. So going back to regular employment will make you feel some type of way, right? And there's nothing wrong with jobs, obviously, but it's just the reality. It is what it is. But again, this whole channel is for you guys. So if you have questions, do not hesitate to send them my way, so then we can really cater to it, because I'm trying to build a community that is being served by the content, not me imposing my beliefs or things I feel about the market on you, because I have my process, and you have your own process, or you're going to have your own process. But it's important to have that customized factor, because it's, at the end of the day, it's going to be you and the person in the mirror, right? So you have to trust that person in the mirror. You have to be confident in that person's ability. And how you do that in this industry is by continuously learning and having your own customizable plan. But there's things that are like cemented fundamentals. Like, for example, intermarket relationships and the relationships between risk on, risk off, and how all markets are connected in some form or fashion, right? And the influence that certain markets have on certain assets. Okay, so obviously there's customizable factors, but then there's also cemented truths and reality. And, my whole goal is to make sure that those unwavering truths, right, those cemented facts about how the market operates is drilled into your guys' mind. So then the customizable factor doesn't get skewed because, you have a strong foundation, So yeah, we could see this go higher into here, maybe tap into this fair value gap, right? It could do that, right? But again, like you can kind of see what DXY has done here. We have pretty much dropped into a fair value gap. We have SMT on the yields, bullish. So that can be pretty impactful, especially because look at this. It's been aggressively moving higher. Obviously, at this point, we can see it's reaching for this. We've had this outlined for the whole week. Okay, so this drop lower to go higher. It's not unreasonable given the fact that we've been severely bearish, and things have been impacted from that. Okay, we see that this has dropped lower. It ran higher to go lower. So it's reaching for obviously the trend line liquidity, which I mentioned again in my private community before the fact, before it even delivered. And we point out the SMT here. That's also justifying this retracement. And why is it retracing? Because price doesn't move in one direction the whole time. It has to go for stops, then back to inefficiency or some form of a discount array or internal range liquidity, however you want to classify it. And then it looks to potentially continue. And if it doesn't continue, there's ways to validate and invalidate that as well. Okay, and we talk about that a lot here on this channel and in my private community as well, right? But given the fact that prices now ran off the highs, it's pretty clear that we have now looked to seek some form of a discount because it's been so bullish. That's totally permissible. And that obviously impacts the way that the indices, the currencies, and the DXY deliver, because the bonds are dropping and the yields are potentially going to continue to rally. That means that we will likely see continued run higher here potentially. What's the draw on liquidity? We have previous day's high here, right? And we have the fair value gap. Very, very clear, I hope, right? And if we go to the normal daily chart, we can see there's an order block here. What turns off the interest to go higher for validation and invalidation? In this specific instance here, the midpoint of this order block would tell me that, we're potentially not ready to give a rally. And we're just going to work inside the area here, right? I don't believe that's going to do anything significant to the downside. Again, I feel like because the yields are rallying aggressively, and this looks like a bullish power 3 here, we could potentially reach up into here. We have equal highs left as well, so that's even more interesting, right? Is a Friday's high, and we have, Tuesday's high. So those are, in my opinion, in the crosshairs, and if that continues to happen, then we will continue to see a deeper drop in the currencies, and then a deeper drop in the indices as well, potentially. Right, so let's just flip through. Right, see that SMT? Very clear SMT. Right, and what has that led to? It's led to price declining. Okay? So if we look at the Dow, we've got a very similar situation going on. Let me clean this up a little bit. So we're inside this daily fair value gap here. If everything goes and continues to go the way that it's going right now, we will continue to see downside movement. Again, we have this fair value gap here. Okay. Again, it's not unreasonable for us to see price want to rally to get up into the fair value gap up there, to then potentially continue to go lower at that point. We've been bearish, so it's not unreasonable for us to possibly see a TGIF today. We have massive liquidity down below here, and everybody that's been winning have been on a high because they think that, oh my gosh, and the news has been amplifying bullishness and all this different stuff. So it was primed for people to get slaughtered a bit, at least for a little while, right? People probably think that the whole market's crashing now, but it's really not. It's just doing what it normally does, right? Seeking liquidity. All right, so we've disrespected pretty much the midpoint of this order block here. I believe that is a 3-day order block, right? We are closing somewhat below. If we definitely close below that, then and it leaves the lows here, I definitely believe the next week will look to blow that out. Okay, but for right now, right, again, if we look at this daily chart, it's pretty clear that we may look to run higher to then drop lower, right? So the sentiment currently is possibly favoring, if it wants to rally up, that may be what it does today, right? And then saves the lows for next week. This is why we have to wait till 6:30, right? Because we don't know what it's going to do just yet. We can't have a hard line bias right now and try to go in and trade right now if there's a possibility for specific things to take place, which in this case could be a rally. Then once we get up into here, if it does choose to do that, that's pretty, it's pretty telling if it gets up into there. And then if, of course, the bonds and yields continue to show bearishness to reach down to this low and this fair value gap, and then if this continues to rally higher, then obviously, we may see extended bearishness. Okay, so at least for the time being, that is the overview of what could potentially occur. Again, we want to make sure that we're observing the wick here. Right, we have an inversion fair value gap. We want to keep our eyes on this midpoint of this wick and the daily fair value gap for the NASDAQ. Okay, and if it can't even get up into the daily fair value gap, that is going to be indicative of serious heaviness. Okay, so that would be further amplification for trust and clarity that we're going to definitely reach down below these lows. I do not believe they're going to leave this. I think that this is going to, in the near term, get attacked. Whether that's today or starting next week remains to be seen, obviously. But yeah, this is a very, very beautiful higher time frame objective, right? It's either going to run up and not be able to get through this and then go lower, or it could get up above into here, into the fair value gap, and then potentially go lower, right? And obviously this is confirmed if the bonds and yields continue to do what they're doing, which is bonds going lower, yields going higher. That leads to bearish indices, bullish DXY, right? Right. As I mentioned, there's an SMT at the lows that's kind of triggered this run higher. So we have a high here. We have a new week opening gap here that we're above. So that's also pretty indicative that we're pretty pretty strong in this market here, right? So yeah. All right, we can see how this left its fair value gap, while the other two, the 5 and the 10-year, have taken them. So again, that's a SMT there as well, not only at these lows, right, but it's also between the fair value gaps, right, that are visible in all three of them. So again, I'm pretty confident that if this continues, and we can confirm that this is going to reach here, which I'm pretty sure it is, then that means that we're going to continue to see potentially deeper drops in the GBP USD and Euro USD, continued potential rallies in the DXY from this order block, attacking these equal highs to the fair value gap, and then obviously continued sell side at some point for the indices. After 6:30, we should be able to get a good feel, 6:30 to the silver bullet, we should get a good feel in terms of whether it's going to want to rally up into this, then go, or if it's just going to, rally, not be able to break through the midpoint of this wick to then go, right? So there's those two scenarios are what I'm looking to see here. And if we look at the quarterly chart, we can see how there was a rally, aggressive rally, set the high. Now we've aggressively came off of that high. Okay, so could be significant. And we also have this 2-week fair value gap with equal lows here too. So I'm pretty confident, given what we see here and all the stuff we've discussed today. I'm fairly confident that we're going to still continue for this to be the draw on liquidity from this the 2-week chart, all the way from the 3-month, down to the daily chart, right? Across the different assets as well for confirmation. Okay, so all of this process that we just did, from looking at the news to discussing all the little analysis pieces that we've discussed, all of that brings clarity. Okay, so there's a lot of things showing that we will draw to this fair value gap. Again, we have to see if that's going to happen today, or is it going to cause a TGIF to then prime people for next week, right? So we don't know 100%. We never will know 100%, but we know what the interest is likely from these higher time frames, and that should translate to the lower time frames. All right, so I hope that all of this higher time frame analysis has made sense. We must get that out of the way before we jump to the smaller time frames. So again, if you have questions or anything, let me know, and we will be jumping on the lower time frames now. Okay, so we go to the 1 hour. Why the 1 hour? Because the 1 hour per ICT's mentions is the best time frame to observe the weekly range. Okay, and he's 100% true, right? We also have a 2 hour that's also pretty decent, I guess, right? I like it. Some people don't, but I pretty much have like 2 time frames for like the 1 hour and the 2 hour instead of just the 1 hour, because you never know. Sometimes the 1 hour will not be that clear, right? It won't show you a clear fair value gap or a clear order block or a clear whatever, right? So it's good to have, one that's in close proximity to the main one you're looking at. In this case, for the 1 hour, I'd like to have a 2 hour, right? So yeah, these blue lines that says order block on it, that is just a higher time frame bearish order block. Right, if we go observe here, okay, so that's a bearish order block. If we stay below that, that's just going to be even further, context that would support the higher time frame analysis we discussed earlier, right? Which is obviously that 2-week fair value gap potentially being attacked, right? It just looks very obvious that that's going to happen. Okay, and the SMT at the highs, the fact that we've changed quarters, and then we've done this rally to drop based on this quarterly chart. I mean, there's just a lot of stuff amplifying the potential for bearishness, right, if that continues, especially given the fact that we're starting to see signals in the bonds and yields to promote that idea, kind of signaling we may be in line with a quarterly shift from bullish to bearish, at least in the near term. All right. So yeah, I hope that makes sense. All right. So again, let's go drop down now to the 1 hour. All right. Given the context of what we just discussed, okay, we have the open price here. You can see how price rallied up above the open price. This little red, little line here that you see, it highlights the midnight candle, or the 9 p.m. Pacific Standard Time from the previous day. We can see how we rallied up above that. Prices come all the way back to it, clearing out all of this imbalance. Kind of in a range here, right? It's kind of consolidating. Seems like they left that low on purpose, right? And again, it's layered. It has equal lows here as well, so that's a massive liquidity pool down below, in conjunction with the fair value gap below price from those higher time frames, right? So you can start to see how those higher time frames help you build more context for even the lower, 1 hour and below time frames, right? It's very important. You can't just be a 1 minute trader. You miss the context, okay? Even if you want to just engage and trade off of those really, really small time frames, you still want to understand what the context is on the higher time frame, so you don't get dragged around by the manipulation, right? Very important. Right? People try to make this too simplistic, right? And it comes back and bites them in the ass, right? So yeah, it's just a little process, and you get used to switching through the different time frames. And again, if you spend time here, right? If you spend a lot of time here with me or anybody else that knows what the hell they're doing, that does this type of stuff, you will become better by default, right? You will catch on. I promise you'll catch on. Can't promise profitability, of course, because that's for you and the person in the mirror to achieve. But navigation, clarity, bias, rules, all those things can be taught by a mentor. And clarity, as I talk about in every call, is the main focus. Okay, so I hope you've had some clarity given to you today in terms of what's in the market, what could happen, right? We could rally up to then possibly use, let's actually outline this real quick so we have it when we go. So if we go to the lower time frames here, we could see that that's the midpoint of that daily wick on the previous candle. So if we can't even get up to the midpoint of that, that's indicative of heaviness, justified by all the other things we've discussed. So I hope you're starting to see that bias and narrative overall, it's a onion. Okay, there's multiple layers to this onion, from news analysis to higher time frame analysis to intermarket relationships to fundamental analysis, like COT, seasonality, right? All those things will have an impact. And if you could break down each of those categories of things, some things like seasonality and COT, you don't have to do every day. And they don't dictate what's going to happen on a day-to-day basis. But it gives you an overall sentiment structure to be able to further amplify whatever opinion you believe you have in the market. All right? So things like what we're doing here with the intermarket relationships, with the, just the higher time frame to lower time frame analysis, that can indicate day-to-day price delivery, especially with like understanding the weekly and daily ranges. That also is helpful with clarity as well. Again, I talk about that in my Power 3 series, so go check that out if you haven't already. But yeah, right. So again, we have the open price here, okay? we've came all the way back to it. Again, I've justified many reasons why these lows could potentially be attacked. If we just bounce around in this range and don't do much, I mean, that's possibly, something that could happen too. But again, that's why we wait till 6:30. We don't trade before 6:30, especially when there's no news event, because that could lead to issues. All right. So yeah, let's observe now some more near-term liquidity. Right, so we have a previous day's low here, right, and we have a previous day's high. So we're working inside that previous day's range. Okay, we also have the blue box here. That's the London low and London high. So we got London low, London high. So those are the two most near-term liquidity pools inside the narrative we just painted for us to potentially go lower. Okay? So if we are going to deliver to either this daily fair value gap I said could be a possibility, or possibly attack the lows here, we have more near-term liquidity pools before price even gets to those levels. Okay, so now you're able to break down liquidity, right, and have longer-term liquidity, which we've outlined pretty much most of the morning so far. And then we also have now lower time frame potential reference points for liquidity if price is on its way to, either direction. Overall sentiment for now is bearish, right? Excuse me. So this is the three indices. So we got the S&P, we got the Dow. Dow looks like it's the heaviest out of the three. I will see what happens there. So yeah, you can see the open price here, as I mentioned, right? We got above it and dropped, came all the way back to it essentially. And we did leave equal highs here. So I wouldn't be surprised if if they do end up running lower, I wouldn't be surprised if they do come up here, take the highs, then go. We have already taken the stops there, but the fact that they left equal highs is it could potentially be an issue. Another observation is the S&T here, right? That's relevant as well. And basically price is pushed off of that. So again, I'm more favoring bearishness, but if we rally up, I wouldn't be surprised because obviously, it's been bearish, so it could turn into a TGIF, right? And that TGIF would, in my opinion, likely look to get up into, potentially up here, right? And then once it's up here, that could be reason to start to look for further framework for next week to be bearish. Depending on the reaction from there, depending on what the bonds and yields are doing in that moment, so on and so forth. Right? We see that this took a high here. If it breaks down below this low, this could be looked at as a potential bearish breaker. All right. So that's something to watch. Let's go to this. So we see this is rocking and rolling. So let me look for So, oh damn, I just saw, what's up, Maddie? Good morning, my brother. So yeah, I hope this higher time frame has been burned into your mind for the since we've been talking about it the whole morning. So yeah, now let's just continue to drop lower, begin to look at further context. Again, there's a potential SMT there, or there is SMT here between these highs, and I think these highs as well between the indices. We do have trendline liquidity here, all right, for the DXY. It wouldn't be unreasonable for them to drop down either to get into the order block, but then we'd like to see a quick reaction if this is going to be eventually the target. 630 a lot of times is used to do things like that, right? That if it is bullish, if it starts being bullish or continues to be bullish from this low here, dropping down into this order block using 630 as the time for or for them to use manipulation to then position to do that, that would make sense, right? Again, if you're bullish and you tried to enter and it does do something like that, that's an example of when the manipulation will eat you alive, and then you'll be upset because you got it right bias wise, but your timing was off. That's why the macros are so important. That's why timing is so important, right? That's why you gotta really be conscious of how the manipulation occurs, like how that takes place, okay? Because a lot of times traders could be profitable, but they just have poor timing, you know? And it's unfortunate because they a lot of times give up because of that. So it's, you know, if that's happened to you, right, you got to make sure you are now aware that that's probably why. It's not your abilities, especially if you got the bias right. It's not your ability to call bias that's the problem. It's not you as the trader that's the problem. It's the fact that your time, I mean, I guess it is your fault. Everything will be your fault, wins or losses. But if you just change your approach to timing, if you change your amount of trades you take per day, you'll see a dramatic change. Just those small little tweaks in your performance will do dramatic things for you. All right, so now we're wicking off this high here. This is a weekly fair value gap here, so we got to see what happens. We could see how this is also an indecision candle for the DXY, so that could be an issue, or well, it's for the yields. That could lead to an issue, right? It's that way across the board. Just something to note, right? The week has been an indecision, so that is kind of, you know, it sets the groundwork for more difficult conditions. If you've had a hard time throughout the week, right? Like price has been doing a lot of stop runs and turtle soups. So that could potentially be an underlying reason why, right? Why it's been a little more tricky, right? We found multiple moves this week that were profitable live in my private community. So obviously there's a way to navigate it, but that's just the way it is, right? Sometimes it'll be difficult, sometimes it'll be easy. So see, so there's SMT at the highs here too, so that's pretty telling as well. It's a good sign the price is going to continue to drop. So yeah, let's see how things behave. 630 has now hit. NASDAQ has dug lower. S&P has dug lower. So the S&P has hit an order block. We have smacked through a fair value gap. Right, so it also fulfilled this fair value gap as well. It tapped it slightly. Okay, it has come off. We do have this fair value gap down here. I'm not sure. Okay, I didn't note that, so let's keep that in our awareness as well, just in case it smashes through, continues to smash through the order block. So again, I hope it's clear in terms of what I'm favoring. I'm favoring things to potentially go lower and DXY to go higher. And then obviously that would lead to the currencies also dropping lower. Something I notice here is there's an SMT for the time being, right? So keep that in mind as well. Again, we're favoring one side until proven otherwise, right? It's been very bullish. It's not unreasonable for them to continue, right? But there is obviously the possibility for them to want to pull back against this bearishness to position at a premium to then go lower, right? But if it has an inability to get up into here, or if it gets up into there and it hits the midpoint and drops and doesn't reach the fair value gap, underlying that is a clear indication, price action wise, that we are extremely weak at the moment, especially on the heels of a bullish DXY. Whoops. So yeah, let's go to the 5 minute. So let's see what happens in here. Looks like DXY will give us some type of push higher. This right here could have been looked at as a breaker, as a bearish breaker that's got disrespected. So that's another good indication that we're going to continue. Yeah, the S&P offered a pretty decent reaction from there. This is a 3-day fair value gap, so let's see how it responds to the low there. Low of the fair value gap. Again, there was S&T at these highs. Okay, Dow made a lower high. NASDAQ and the S&P have made higher highs. Another thing you can observe here is this being a bearish breaker, right? Low, high, lower, low. Looks much more clear here. Low, high, lower, low, right there. Obviously, well, price did kind of return to it here. Right, then gave the drop. But again, we're before 630. This is why we wait. Right? Observe this wick. Watch how this wick is either respected or not. If it respects that, if you were in a trade, then you're able to trust price going lower. Just like a tip for in the moment trade management and observing institutional order flow. The wicks are important. Up wicks like this, the midpoint acts as a premium array. Right? And then down wicks in a bullish move, the midpoint acts as a discount array. All right. So yeah, we see that the yields are somewhat coming off the highs. we have set equal highs here. So again, I don't feel that, you know, it's going to leave that. So 650 is the earliest time I will be possibly considering making a decision, right? And if nothing happens there, then we move into the silver bullet, right? If we find something that happens inside that silver bullet, then we'll look to potentially engage, right? If everything makes sense. If things are super lacking symmetry, obviously we'll sit on our hands, right? We're in no rush, as always. We want to see some of the things that we've discussed take place so that we can make a educated, accurate decision, not an impulsive, I need to get rich today decision. Okay, so now the NASDAQ has delivered to our bearish breaker here. Okay. It's delivered to the bearish breaker. So let's see how that responds. Again, our narrative that we want to see ideally is to go lower. Right? But if it gets above this bearish breaker, the midpoint, then all interest for me in terms of bearishness for the moment would turn off. Right? If this delivers down, if you miss it and you're trying to be conservative, how would you look to possibly think about getting into a possible entry as a continuation? Well, these are consecutive up candles, right? It's an order block, right? So if it got down below that, it's reasonable to consider this as a potential resistance level, right? Yeah, we'd like to see, obviously, the DXY show strength, if that's the case. And then we'd also like to see the yields continue to go higher. And then we'd like to see the bonds continue to aggressively try to reach down to the lows here in the fair value gap. And that builds confidence in our ability to potentially engage a short position. Now again, if that breaker midpoint, if we can't stay below this, that's a problem. Right? A problem for short ideas. So yes, there is actually an order block here as well. So yeah, now, right? It's pushing past, okay. So yeah, no entry for shorts for the moment would be of any interest to me right now. All right, so if it does not want to drop currently, we have our contingency plan for option number 2, right? Which is obviously price looking to run higher, potentially hit up into the midpoint of that wick, the daily wick we pointed out, which is here. Oh wait. Which is here. Not sure why it's not showing. All right, we got the mid. Well, we could just use the daily fair value gap below. All right, so now price has run above these highs here. So if we wanted to consider a tradable idea going higher, right? There's a shift in market structure. SMT at the lows. So that's starting to now make me confident that an opportunity to buy to get us up into that other potential idea would make sense, right? So there was a YouTube model there, right? So the next opportunity, because this one was missed here, to frame out that run higher into possibly the wick I pointed out just now or the daily fair value gap, we'd have to see price return down. Ideally, I would have liked to see it return down into this order block here, but I'm not sure if that's going to take place here. Very interesting how they left these lows. Remember earlier how I said they could potentially use today as a TGIF, right? And they could rally up to try to attack liquidity, and then possibly look to set up for next week to lean into more of a downside draw to that weekly fair value gap. Right, but we'll see. We'll see what happens here. It's not even 650 yet. It did obviously offer that opportunity to buy, right? Which I hope was a clear view here, right? Obviously, I've missed the trade. Going back to what I said earlier, you're gonna miss trades, right? You don't want to be so flip-floppy demanding an entry, because if you look to demand something and it's not falling in line with what you're trying to see in price, then you're just gambling, right? And we don't want to gamble, right? DXY is not fully showing clarity that it wants to support this going higher, right? So we have a lack of symmetry right now, at least for the time being, right? And when things lack symmetry, eventually they kick back in line. So you got to be the one that has patience enough to get in line when the opportunity shows itself, versus becoming like the trader that is trying to demand and guess and push and get totally violated. All right. Happy Friday, brother. Appreciate you hopping on. Appreciate your support. I hope you've had a safe week, brother. It's been a pretty hectic week, right? So hope you've been safe. All right, so we're actually coming back to that order block I just pointed out. This does look kind of suspect, right? It looks like they may have set highs, right? Just for further run, right? But obviously this deep drop, right? Deep rally, kind of suspect, right? Let's see the reaction from this order block here. Right, if you go from this high to that low, we can see that inside this range here, we've basically come very close. Well, we kind of blown past equilibrium, huh? So let's see what happens. If price is to break and close below this, this now becomes a bearish breaker. Right, so for this, if this was a buy you were looking to consider, the invalidation would be obviously the midpoint, right? And this order block in general, if it was to not respect that at all and just blow past it, then obviously any type of buys would be out of the question, or out of the conversation, right? So we missed this first opportunity, right? But again, this is right after 6:30. Remember what we've talked about today about the narrative, what I want to see happen. Different scenarios that could lead us to that objective. This could be one. Right? If price is to break through this swing low here, then that's pretty indicative of us continuing to then kick back in line with the layered sell-side liquidity delivery. Seems like DXY is surely confirming that, at least for the time being. Right, so you have a fair value gap in here. See how price wants to deliver from there. Let's go flip through and see. There's SMT at the highs. Beautiful SMT at the highs. All right, so this should be I feel like we're going to start to go lower now. Okay, so I'm favoring shorts, right? We've been favoring sell side delivery from the start. Just wanted to see the different scenarios I laid out, see which one it wants to choose. And now it seems like we've run above these highs. We've left S&T. If DXY continues to go higher, then obviously it'll be in the cards for us to possibly get down into here. So we're back to equilibrium, right? If you go from, this low to this high here, we're back at equilibrium. Okay? So again, we have this order block we looked at. What is it? I think it was on the 7 minute. 6 minute? 5 minute. Where the hell? Where'd it go? Let's just remove that then. So yeah, we see this order block here. Again, if it closes below the midpoint here, I'm pretty confident that we're going to continue to go lower. Whoops. So we left equal highs here, but there's also the SMT, right? This is suspect. Right now, currently, we've laid out a couple scenarios favoring potential sell side overall for the narrative. For the bias today, we have basically been chopping now, right? So we could have had the bias being bullish. It looked like that could work to then, catch it off this order block here to go higher, reaching into that daily fair value gap above price, which we discussed earlier, or the wick midpoint on the daily chart, right? But we have completely been one-sided. We're aiming for the sell side. How that sets up to do so obviously remains to be seen, right? We've disrespected this whole order block here. So again, I'm pretty confident, given the bonds and yields as well, they look like they're still favoring sell side. Right? We see that GBP USD is also looking like it wants to continue. Right? We haven't fully reached into this fair value gap here. We have reached into the, I think this is a 3-day fair value gap. Right? So yeah, let me make this larger. So let's see how this responds after we shift through the low here, right? So for the YouTube model, if that's what you're trying to employ, obviously the only thing that you had to go off of was this potential run higher, which is very short-lived. That's a tradable, obviously a tradable opportunity, right? But in terms of sells right now, there's nothing to go off of yet. Right? Now, if we break through the low here, obviously, like we talked about earlier, this becomes a very beautiful bearish breaker. Okay? So this is what trading is. You got to wait, play out different scenarios, see which one takes place, have a favored side. In my opinion, it's the sell side for now. Right? And price has just now been chopping around. We came all the way back to equilibrium. So again, there's nothing to push right now. Right? There was one opportunity there. We missed it earlier. But it would have been in line with the daily fair value gap above price to be attacked. Right? Appreciate the sub. Right? Appreciate you. Right? But now since we're back at equilibrium here, we have to be patient. It's the hardest thing about trading. It's the hardest thing about this industry is being patient. I guarantee you right now, there's like probably a massive group of people that have just gotten totally whipsawed and are now demoralized already, right? Completely demoralized. And if an opportunity presents itself, they're not going to have the balls to enter. right? They're just not going to. So yeah, this breaker here was basically disrespected there from earlier. So yeah, it looks like price is moving now away, but think about what's happening intermarket relationship wise. Okay, DXY is rallying with the indices. It's not even really doing anything, in all honesty, right? We have to have more clarity intermarket relationship wise. We have to. We have to have clarity intermarket relationship wise. At least I do. I need the clarity intermarket relationship wise. Because generally that brings very nice, beautiful results. Right? So if you look around here, you can't, there's not, what are you assuming could have got you in a trade? Just ask yourself that question if you're sitting thinking, oh my God, I need to take a trade. Ask yourself, which direction would you have been confident? Right? This was a pretty beautiful run. Right? That's more than enough to have taken a pound of flesh, got up out the market. That's 100 points. Big move. Right? Other than that, there's been really nothing. S&P, same deal. But there wasn't even one move that built clarity. If you go from this high that took the buy stops, this low that took the sell stops, you measure that out, it's right at equilibrium. Measure from this high to that low, we're basically hovering right above equilibrium. Right? It's just stuck coming from equilibrium to discount to premium to equilibrium. Right? So we're just navigating around. Clean this up a little bit. So you're probably wondering what this fair value gap is. That's a 3-day inversion fair value gap. If it stays below it, obviously. Right? So 5-minute. SMT at the highs, like I mentioned. So yeah, DXY is consolidating. Yields are rallying, promoting bullish DXY, bearish indices. Bonds are declining, favoring bearish indices. So again, I'm favoring bearish indices. Right? So now we're just kind of hanging out, just hanging around, right? DXY is just hanging around. Everything from a bonds and yields analysis is obviously doing exactly what we assumed it was going to do. Right? So that's nice because when DXY and the indices are consolidating, but you can see clearly what the bonds and yields are doing. That gives you an indication as far as what should occur outside of that consolidation between the indices and the DXY. If the bonds are declining and the yields are rallying while DXY and the indices are consolidating, then it's going to end up breaking out to the downside for the most part for the indices, and then obviously for the yields and DXY should continue to run to the buy side, right? Generally, that's what can be expected, right? And how you can use the bonds and yields to analyze what could happen outside of a consolidation between the DXY and the indices. All right, so we'll see if that's the case today, right? We'll see if that transpires. It should, right? So just some considerations for using this tool, right? So GBP and the euro. Yeah, GBP and the euro are doing the same thing, just stalling out. Again, when it's times like this, we've had, I think, 6 days in the last month or so that have had a very similar thing to this, right? Bonds and yields doing one thing, DXY and the indices kind of being held, right? Or just going completely against any type of correlation, right? And then obviously, when times like that occur, people are getting slaughtered, guaranteed, because I was one of those people before, right? Because it makes it difficult, right? Look at this. This is all consolidation. Do you see anything in here that you would have been confident in taking besides this? Right? And then with all the things we've discussed, right? Because we have so much layered details, it makes it a lot easier to say, yeah, I'm just going to pause. I'm not going to dive too heavily headfirst into something right now. Remember what I said about the bonds and yields, right? The yields are rallying, the bonds are declining. DXY and the indices are consolidating. Because the bonds and yields are showing us what the true story is generally, inside this consolidation, the narrative we painted was price potentially digging lower, right? Inside this consolidation, people are probably confused because we do what we do and understand what we understand. I know, for the most part, what price is likely to do outside of a consolidation, right? Because it generally is a repeatable thing. If the DXY and the indices are consolidating, but the bonds are showing bearishness, yields are showing bullishness, that will lead to more clarity, right? When you're looking at the indices and the DXY inside consolidations, right? So I feel like we're going to continue going higher, like I said, and then lower in the indices. Right? For those of you that have been patient, right? For those of you that have been, sitting through the boring stuff for the most part, you're going to see the fruits of that patience, right? You're going to see the fruits of the analysis that I try to drill into everyone's head, right? And those that listen, pay attention, and do the work, especially the ones in my private community, and I mean even on these calls, right? You will bear the fruits, but it's up to you. So we're in the 650 macro. So remember also when I've been talking about the timing, I mean, look what's happened before 650, before the macro occurred. Price has been consolidating, right? So 650, these macros, you may get more evidence for the importance of using macros as a timing tool and how that can stop you from overtrading, and it'll stop you from getting into positions that won't do anything, right? They'll just be stuck, like in the mud, like it's been since before 6:30. See, so for those of you, again, that have stuck with me from the start, endured all the analysis and everything, look what has transpired. At least for the time being. Right? This is a beautiful visual indication and a priceless piece of experience in terms of specifically analyzing consolidations that are occurring between DXY and the indices, while the bonds and yields are clearly trending, right? It shows you, it gives you like an x-ray view as far as what could potentially happen moving forward in many cases outside of a consolidation in the DXY and the indices, right? But we'll see. We'll see if we get something significant that comes from this. If you entered somewhere in here and price dropped down and got below this low, because it's Friday, because it's been very, very choppy, you would, in my opinion, at least, you know, if you're taking my advice, you would take profit there. Because think about it, this run to this high was 100 points. I'm pretty confident that this to this low here, at a minimum, was like 20 to 50 points, if not more. And you only need 20 points-ish, right, to build a massive career. Again, I am not a financial advisor. It's not financial advice. Any positions you take, any wins, losses, any types of things like that, aside from educational view, is solely your responsibility, right? But I hope you guys have been getting value, right? I appreciate those of you that have liked the video, and I especially appreciate those of you that have sat long enough to bear the fruits of what has been discussed and shared with you guys. I hope you guys have been getting, you know, a couple more pieces to your clarity, progress, and process, right? Because that's the whole goal here. I appreciate you, brother. I appreciate you for sitting through, right, and trusting that your time is not being wasted. I sincerely appreciate that, because my goal here is obviously to provide as much value as I can. And when I see that students pick up the value and they benefit from it, again, that's the whole reason why I'm doing this. Because I could just be doing things, you know, by myself, like I used to. Or I could just remain in my private community, right, which for the most part, most of my time is spent there. But I know that there's students like you guys that take this serious, right? So I feel I'm obligated, especially if you guys are willing to sit through like you guys have been. And, you know, just the fact that I've been able to prove to myself that I've been able to do this for 3 straight years full time. I feel I'm obligated to share the blessing, you know. When I face God one day, I have to be able to tell him that I did try my best to help with the blessing I've been given, you know. Not only for being able to stumble across ICT, right, but the fact that, you know, there is a way to simplify this, and keeping that a secret. I mean, you know, we got to help our fellow brothers and sisters out, you know. And those that'll listen, right, hopefully, you know, feel that their time is not wasted here with me. So yes, sincerely appreciate your guys' support. If you took an entry there and were able to, you know, come away with something, we did not get lucky, okay? We've had the whole scenario on a leash the whole time, right? Obviously, we had to wait, right? And that's a big part of trading, is waiting for a chance to strike, like a sniper, right? You got to sit and be able to wait, get the perfect shot. If you don't have a perfect shot, are you going to blow your cover? in a trading capacity, are you going to blow your account because you just can't wait? Oh, nice. Yeah, the silver bullet idea is pretty awesome. But eventually you'll become more advanced and be able to see the macros. There's damn near a silver bullet every hour. But if you incorporate all the macros, of course you pick AM or PM session, then you obviously operate within like one or two of them, right? Whether that's in the AM session or the PM session. But getting started with just the silver bullet helps you see that you don't need to spend hours and hours and hours on the chart. It's just unnecessary. Eventually, right, if you do achieve full time, you're going to definitely want to spend as much time as you can preparing. Yeah, brother, I teach about every possible topic that can hopefully assist in clarity. If you don't follow me on Instagram, definitely follow me on Instagram at WMG Trading. I have so many highlights, so many testimonials, just so many success stories from people that have been gracious enough to give me their time. And I'm grateful that they've walked away with positive things from the time we've spent together, right? And shout out my private community. You guys are freaking amazing. And shout out you guys too for sitting here listening to me go on and on, right? I appreciate you following me, brother. So yeah, on this YouTube channel, in my private community, any capacity where I'm here running my mouth, right? I'm focused on clarity. If this is your first live call that you've been on with me, the whole goal is clarity. The whole process that I went through today, the whole point is to gain clarity, right? The whole point is to gain clarity, to make educated decisions, know when things are incorrect, when things are invalid, when things are valid, so you can trust things. And then it's up to you, as it should be, to achieve profitability. Because the whole goal here is to build independent traders, not to have you ball and chained to my opinions, right? Eventually, I want my community to be here to, just enjoy the time that we spend together, But then obviously those that need the help to gain the clarity, to borrow the experience, to understand these different principles from time to like timing, to routines, to fundamentals, to risk management, to mindset training, to bias, narrative, all these different things. Selecting the right PD array. How do you create a model? Because Silver Bullet and the YouTube model are not the only models. There's many, 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 many models, unlimited amounts of models you can create for yourself if you understand the dynamics of how to create a model, which I also teach, right? And you keep it simple. You don't make things complicated. Again, like I said earlier, narrative and bias is an onion. You have to crack each layer so you can gain clarity, right? You can't just say, oh, higher highs, higher lows, and I think it's bullish. Because that's just not the case. It's just not realistic. It's just a myth. Although it does have that in some capacity. But there's things like the classifications of highs and lows, intermediate term high, short term high, long term high, right? The relationship that those have to each other. How does that create market structure? How do you validate and verify whether you should hold a trade? What does institutional order flow look like on a minute to minute basis, right? Like what can show me in the chart, in the moment when I'm in a trade, that I don't need to worry, even when it pulls back on me? How do I build that clarity? How do I be confident in that manner? There's a process to that, right? Every question that any trader has, there's an answer to in ICT concepts. That's why I personally fell in love with this, because sitting there with all these goals, dreams, and aspirations, and having so many questions that are unanswered that retail logic just can't answer because the answers are not there, because it's all random, right? To all these people online, it's random, right? No, absolutely not. Every fluctuation in the marketplace has an impact, right? It has an influence over things, right? Well, first off, like I mentioned earlier, you want to understand the daily and weekly ranges. You want to master, obviously, the basics of one specific model. You want to eventually figure out how that one model has continuation variations throughout a price leg, so you don't need to worry about missing a setup, which I also teach here as well in a deeper capacity in my private community. You also want to learn a good series you can go look at that's very powerful for bias, right? A very simplistic view on bias is ICT's, I think it's like effective scalping or something. Let me go double check what it's called. Give me 1 second. It's very important. It has to do with like bias and stuff. But yeah, daily, weekly ranges. What the hell is it called? Let me see. Sorry, give me 1 second. I advise everybody on this call and every single person that's trying to learn bias to go look at this as well. It's not a be-all, end-all, but it's one piece to that onion, like I mentioned. It is called... I can't believe I forgot what the freaking thing's called. Where the hell did it go? High probability scalping, volumes 1 and 3, or 1, 2, 3. Right? Mastering high probability scalping. There's a beautiful gem in there that is extremely helpful for bias, for those of you that aren't aware. But eventually, obviously, you want to get exposed to all the information because you want to be an independent trader, right? You want to have your own model, right? You want to understand all the different elements that create your ability to have a customized ability, right? You have to be exposed to majority of all of your topics that you have in your hands. So then you could eventually figure out what the basics are, which I teach in my private community, like the foundational, unwavering truths in the marketplace. Once you have those narrowed down, it's like building a good foundation. Then you can go around customizing things eventually, right? But the basics of a trading plan, what's involved in that trading plan, right? Like what needs to have an answer to it in order for you to eliminate the guesswork, right? And all these different things, once you solidify them and have a process for like each category of importance in a trading plan, and all the foundational basics, then you could start customizing things eventually. Maddie, it is the Mastering High Probability Scalping series, and since you're already in my private community, we'll dig into that tomorrow morning if you'd like. We could dig into everything I feel is important in that little series. So you can watch it. It's the Mastering High Probability Scalping, Volume 1 through 3. But yeah, again, if you want, if that's something you want us to talk about, we can have a whole video tomorrow about that. I had a different lesson planned for tomorrow. But yeah, we can knock that out before I move on to the lesson I was going to teach tomorrow. And Maddie, send me any topics based on the 11 categories I've given you in the trading plan section. And then we can make some lessons around whatever difficulties you're having. But yeah, no worries, SD. No worries, brother. Thank you for supporting me. Thank you for supporting the channel. Give me your time. It's very much appreciated. Right? So yeah. So seems like prices very undecided right now. It seems like it's still leaning towards favoring what I've assumed, right? But then again, DXY is also kind of being very faulty and kind of moving with the indices right now, right? So it's a little bit questionable, right? Fridays can be hit or miss, right? It could be very exciting, or excuse me, or it could just stall out, right? This week has been pretty aggressive to the downside, so I'm not surprised that they're not doing much. That doesn't mean, obviously, that doesn't mean that PM session is going to be weak, right? We do have a news event coming soon, so that's probably what they're preparing for at 7:40. That's probably why it's being held the way that it is, because it's an FOMC-related announcement. And, yeah. Had a crazy week this week. Haven't been able to edit and submit. But no, stop it, Maddie. Come on, yo. Come on. Come on. Bro, take the negativity away, all right? We all have life. Life is going to happen to the best of us, right? All that matters is your focus is in the right place. And I hope by now, just in the time that we've spent together so far, I hope you realize and understand that you are in good hands. And I appreciate what you said about me and the community the other day. Sincerely grateful. I'm super grateful. And I'm glad you've had a good time so far. I hope you've been getting all the value that you were promised, at least for now. There's a long way to go. But I hope it's been everything it's been cracked up to be, right? So thank you for what you said the other day. How was this week for me? This week has been slower. Like I said earlier, we've been able to knock down 2 trades this week that went over 100 points. We snagged our piece of flesh, which was 60 points. I believe it was yesterday. We missed 3 opportunities this week. But nonetheless, we've been very patient as usual. And the last couple months, even from these live streams on YouTube, have been incredible. We've been able to get in front of 5 trades that went over 200 points plus live, whether that's been here or in my private community, and they will call me a liar if I'm lying, because, there's no way to get around when you're in the public eye and you're making statements like the statements that I make. So it's live. Pretty much 99% of the things that I do are now live. Not much happens behind closed doors anymore because of my private community. Wins, losses, everything in between. We have taken losses, but we just have a process that works. It's not recreating the wheel, but it is my personal structure to how I've framed ICT's concepts. Doesn't take away anything, doesn't mean I created anything. It's just there's a customizable factor to being an ICT trader. So you develop your own perspective and what you think is important. But again, there's unwavering truths that will not be changed. And once you have those locked in, anything else that you do outside of that, that little framework, right? Those unwavering truths, like how bias is called, and what you have to do for risk management, and what you need to have answers to in a trading plan. Once you have all the answers to those things, things become a whole lot more clear. And clarity is a lot easier to find than you think. Doesn't mean that you'll have it every single day. Doesn't mean that you won't miss trades. Doesn't mean that you won't take losses. But having clarity as far as what you're trying to do, it's very much attainable fairly quickly. And but yeah, how was my week? My week has been pretty slow. Still amazing. The last couple months have been ridiculous. Okay, not to toot my own horn, but it's not just me. One of my students has been hitting at a 77% hit rate, 77 and 75% hit rate for the past month and a half, and he just joined us like a month and a half ago. His testimonial is on my Instagram if you want to go check that out and make sure I'm not hyping something up that's not true. Yeah, many of my students started from the YouTube channel. Oh, whoops. I was looking at the freaking news. Sorry about that. But yeah, this week has been amazing. How about you, brother? Have you had anything that has made you stumble? Do you have anything that you would like to celebrate? I'd love to celebrate it with you. Yeah, I hope each and every one of you have had a safe, hopefully profitable week, whether profitable in monetary value or profitable in learning. All right, I hope it's been productive. Hope you guys have, you and your families have been safe. I know the world's crazy right now, so I hope you guys have been safe. And for those of you that hop on these calls all the time, I hope you've been getting value, right? So yeah, what you see happening right now in price delivery, how it's just not doing anything, especially here in the NASDAQ, it is waiting, plus in the S&P, it's waiting for the news event. This is, again, like I said earlier, one of the hardest things to do is wait and not take any trades. Have I pushed a button? Have I been anxious, trying to push things? Absolutely not. It's not how we have to operate. Right? You got to be very patient. You have to be very cautious. Not scared, but calculated. Right? Snipers don't shoot like machine guns. Okay? They make sure that their target's in the crosshair, the wind's good, the scope is aimed properly, and then when the time's right, they pull the trigger. And if it's not, if things don't align, they don't pull the trigger. Same with us. Our higher time frame analysis, that's us refining our scope. That's checking the wind. That's doing all these different kinds of things. Right? Then once you get down into those lower time frames, it becomes business, right? Comes time to do business. Is this creating a low resistance liquidity run to the upside? It could potentially do that. Possibly, but again, we're inside that news event, right? Or it's the news event is coming. That could very well turn into a low resistance liquidity run depending on what occurs. If the DXY continues to tank, it may have low resistance signatures once the news event comes out. It seems like they're layering buy-side liquidity, huh? There's equal highs, right? There's continuous lack of stop runs, right? Sell side's been taken here inside this fair value gap. We do have that higher time frame draw to the upside that could set us up for next week to be bearish, which it could also be in line with the TGIF to run higher, so it very well could be the case. Right now, we are in low probability conditions, at least for the time being. Right now, if we get a break aggressively above here and DXY chooses to tank, right, then we could lean into some high probability, maybe around 750 to 810. Right, so low resistance. Here's a fact as well for low resistance liquidity runs. Low resistance liquidity runs 95% of the time will present themselves from a macro. Okay, so there's another reason why the macros are so important, right? SD, you're gonna save? Oh, something I said? Nice. Oh yeah, no worries, Maddie. No worries, no worries. So yeah, definitely observe that. But again, we do have this as potential bearish breaker. It could potentially set us up with a bearish breaker here. Again, if it just can't set up any type of strength, if it can't muster any strength to get us up into the highs up here, right? And it just stays down below the breaker. And if DXY rallies aggressively at some point, pretty much falling in line with, the assumption that, maybe we take out the highs here. Notice how this high here is lower, right? Notice how, it did take liquidity here, but it left this high. So if price gets up there and it does choose to want to run up there, it'll likely blow that out as low resistance as well. Yes. So if there is something that's going to occur in a fast, sudden movement, presenting us with a low resistance liquidity run, generally low resistance liquidity runs start or get engaged from a macro. And if you go back and back test this fact, wherever there's a fast, sudden move, for the most part, it'll happen coming from a macro. And that's how you can get a high probability opportunity as well. Of course, high probability, low probability, there's lots of layering factors, which we can go into maybe this week or tomorrow maybe. I think I also have a video in the archive for the mentorship videos. I think I have one specifically related to time, low resistance, and high resistance liquidity runs and stuff like that. So yeah, right now it's starting to seem like the overall view that price is going to go lower in the NASDAQ based on what the bonds and yields were doing. That whole overall perspective we've had this entire morning seems like that's now finally coming to fruition. Again, we have a news event, so you gotta be very careful, right? It's been very, very choppy. It's full consolidation range from last AM session, right? So yeah, we got to be very cautious, right? But yeah, it seems to me that things are going to favor what we have basically said and been looking for with this little flag sitting there. All right. So yeah, now that we have that displacement, that's kind of telling. It's not only happening in the NASDAQ, it's also happening in the S&P. Beautiful, SD. Good freaking job, bro. I appreciate your trust. Right? And I hope you understand why, the whole context as far as why price going lower was more likely, right? And why why the narrative being bearish was being considered, right? I hope you understand all the things, the context that we've laid upon that to make it so that is a reasonable assumption, right? So yeah, in my opinion, right, we got to watch and see what happens here. Again, we have this breaker. And I'm grateful that you're still here watching the move, brother. I hope you've been here for a reasonable amount of time, so you were able to catch most of the context, because that's what's important, right? Because the context builds clarity, and clarity will lead you to independence. I appreciate you, brother. Sincerely. Thank you. I hope you're subscribed to the YouTube channel so you don't miss any other videos and live streams. I go live, once or twice a week, depending on whether I have to spend more time with my private community. We go live 6 or 7 days a week generally. This month has been a little rough because on Sundays and Tuesdays, or Sundays and Tuesdays, I've had some stuff I've had to do, at least for this month, going till the 11th of next month. Once that's over, we're going to be 6-7 days a week again, going live. Right. Yeah, guys, I hope you've been getting value. We will call it a day at 8 o'clock. I'm actually glad that you're saying that you didn't take a trade, brother. Oh, nice. Oh, you just got a different you got a different name then, huh? Nice. Yeah, I'm very glad that you did not take the trade, right? SD, I like your independent thinking, right? I like that you took it off your own belief, right? Had probably a little bit of influence from me, and I hope you, again, got the context to everything. So it makes it even more impactful. But the fact that a trade wasn't taken in this other student's view, right? The fact that you didn't take the trade made it so you're fully focused on why, like what happened leading up to price dropping lower. Mind you, we've had this flag here probably for like 45 minutes to an hour, right? It's been sitting there one-sided the whole entire time, right? I'm going to trade GJ. What's your... Oh, nice. I'm glad, bro. I'm glad. But that's the thing. You look at what I'm doing, and it's probably convincing, hopefully, and motivating. Probably a better word, motivating. Because nobody can convince anybody other than you convincing yourself, right? So me possibly motivating you to dig deeper, and then you see it happening, is going to finally have you convince yourself. And then that's when things will become serious, because you will understand that what you're studying, even in the boring moments, is going to be impactful to you. You're going to gain a lot of information and a lot of experience, and it won't just be some boring random event that takes place. Oh, okay. Okay, for sure, Trey. Sheesh. I talked to you yesterday. But yeah, I'm glad that you're finally starting to really see like what's going on. GJ is great, right? All the currencies are great. We observed some of the currencies today, GU and EU today, and that had an impact in terms of confirming, what we were trying to observe as well. Because risk on, risk off, everything is connected, right? So it has an impact. So you're not going to entirely get rid of currencies, obviously, but given the fact that you're in the United States with me, I highly suggest you move to futures. For one, it's more professional, meaning that there's not as many deliberate attacks to your stop loss. If you're 1 point away from getting stopped out, your stop loss will not intentionally be getting punched out. So that's one massive reason, is it's less likely that the broker can play games. We all look at the same price structure and prices when we're looking at futures. If you're looking at the actual futures contract versus US 100, so on and so forth. So they can't play games. Everyone's retirement accounts are in these for the most part. So it's forced to be more professional. So yeah, if you guys didn't know about that, and that portion of things in terms of the indexes or actual futures contracts in America, that is the reason I switched, because I was a GU trader. I only traded GU. That's why I still look at it today, aside from the fact that it's very helpful, right, for risk on, risk off, right? But I got sick and tired of getting stopped out, right, all the time, and then the freaking price went in my direction, right? And that was obviously really early on, so there was probably more to that. Lots of mistakes that I found myself doing, trading before the 6:30 open, right? Trading before open prices. A lot of the things that I now implement, it's a lot more controlled and organized, right? But once I figured out that it was more professional and things weren't so ridiculous, although NASDAQ is pretty insane, I don't recommend jumping into NASDAQ to start off if you're trading indices. If you learn how to trade on the S&P, but actually, once you have your process, doesn't matter what you trade, right? You could trade crypto, okay? If you understand the basics of things, it's all fairly similar. Crypto is 24 hours, so it's a little bit different. It has a little bit of a difference to it, but nonetheless, the process is generally the same. Things that you're trying to use to confirm or negate situations is generally the same. So yeah, you see how this came up into this fair value gap? Let's see if it can try one more time. It seems like we're very, very heavy, so it's probably not going to come back. It'll probably just continue to tank. Right? Notice how we didn't even offer anything inside the breaker. It just refused to do so. So what I was talking about earlier in terms of reading institutional order flow, and Maddie, if you're still here, I have a video about this as well, like a very, very deep dive into this logic. But from a surface level, if you look at the wicks here, watch the midpoints, right? When price is delivering in a particular direction, study how the midpoint of the wicks gets respected or not. That's a visual, just like how bearish order blocks should be getting respected if it's bearish. Right, it should be respecting and disrespecting bullish order blocks. When you're watching price print, observing the wicks, this is a visual representation of the institutional order flow current at the time. So if it's bearish and you're trying to trust it getting down below the low, if you're if you're entering a trade and you're in it managing it, this is one of those things you watch. Right? There's a couple other factors for validation and invalidation. But this here is a very, very interesting study, right? Nice, bro. I'm glad that you've been implementing it, brother. It's fascinating, isn't it? Something so small can have such a large impact. I try to find all the things that do that, and then put it into context in terms of process. And it's a beautiful tapestry of, art. It's like some artistic ability. So the NASDAQ has not come up into the fair value gap, but the S&P has. So let's try to see if it's going to deliver through these lows here. FOMC is coming, I believe, in 1 minute. So I wouldn't be surprised if they use this to smash that large sell-side liquidity pool and possibly even reach down to the fair value gap down here. I believe it's a fair value gap, right? Yeah. Daily fair value gap right there. All right, so 2, 1, blast off. Let's see. See what happens. So we do, again, run the risk of TGIF pushing price up to save it for next week. We run the risk of that, right? Trading right at a news event is obviously risky regardless because you can get it wrong and it could go against you. So it's not advised to trade right at a news event, right? But let's see. Let's see if the downside objective, given the weakness, let's see if it'll smash through the lows. If it smashes through the lows, then I'm really not surprised if we get a massive retracement running back up to the highs. So again, we outlined the fair value gap there. Target these lows. Nice and easy. Right? Let's see if it can give that. DXY is still pushing. $750 macros coming in. So, right, I practice what I preach. I don't just talk, okay? Because we run the risk of it stalling, right? Taking the 5 points is not a problem. 5 or 6, whatever points, right? Right below the low, right? Right before it hits this low. Right? Very simple, in and out, no stress. Waited all morning. And there it is. From the fair value gap to the low. Closest target, given the fact that it's Friday, given the fact that there's a risk that we could run back higher because it's Friday and, we could see a reversal. It is FOMC. It's a type of FOMC that could shake things up, could go against everything. The fact that things have been kind of shaky this morning, hard to read, right? Very simple. In and out. Right? 6 points. Right from the fair value gap to the low. Right? Well, I got 6 points. Somewhere around there. Right? Beautiful. Just that small piece of flesh. Right? A couple times a week with a regular standard contract. One contract can totally remove your need to be at a job, if that's what one of your goals are, right? Because I have some students that continuously trade but refuse to quit. They don't want to leave their job. They like their job. And there's nothing wrong with that. Don't let me persuade you from leaving something you're passionate about, right? Unfortunately, I never found a job that I liked. Lots of my jobs I was at, they treated me like crap, as they do in many cases for a lot of jobs. Some jobs are very nice, right? Some jobs are, useful, right? People are passionate about specific things. Right, so don't be discouraged or encouraged to quit a job that you enjoy just because you're trying to be a trader. Right, because trading full time is not for everybody. Right, it's really not. You got to be very, very good with your time. You can't be lazy. You got to be very, 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 very strict with your money management in real life, as you should be in general. Something that's a very hidden issue is people that are horrible with their money management in real life, buy a bunch of nonsense, get into a bunch of debt, try to, blow all their money every time they get it, no control. Those people try to trade full time just because they had a good week, quit their job and do all these things, then devastate their life. Then they can't get their job back. Then they, when you become full time, you want to be confident that you are very controlled and you're not going to blow your account. You're not going to overtrade. You're not going to let your emotions get the best of you. And who knows how long that takes, right? That takes a different time for everybody, right? It could take less than a year, like one of my students, and his stories in the highlights on Instagram. It could take you, 2-3 years, right? Or more. Just depends. Hopefully spending time with me, right? I haven't had a student thus far take that long. But it is a reasonable situation, So maybe you are very busy and work 10 hours a day. Maybe you have kids, multiple kids, and you can only spend a little bit of time. All of that becomes relevant, right? And all that will impact whether you quickly become full-time or not, right? Also depends on your goals. What are your goals? Are you just trying to pay bills, like a couple bills here and there so you can cut your hours at work? Because you still love your job, but you just want to be able to work less? There's a place for you in this industry to do that. You're trying to quit your job entirely, there's a place for you, right? There's a place for everybody. You dropped out of high school, you went to jail, you got out, you want to have a better life, there's a place for you. There's a place for everybody. Right? So, very important to get around the right people. And, if I didn't get around the right people, I probably would have quit a long time ago. I had like a handful of people that I started trading with. Only one still trades. Like aggressively out of a handful of people. Set aside the fact that, there was hundreds of people that I started trading with, right? Like, oh, I like trading. Hey, come try trading, right? There's like 3 of us left out of hundreds from the last 4 years. And then a handful that took it serious, there's only like 2. One is questionable. Can't remember if I haven't heard much, but I think I've heard recently that he still trades. The other one is my friend Byron, right? And he's in the private community. His story's amazing. He still has his job, but he still trades too. So getting around the right people that have been through experiences that you'll experience, how to deal with those things. It's not all about technicals. It's a heavy part with technicals. It really is. Right? But there's more to it. And you need to get around the right people to get that right mindset. Because trading is difficult. There's no way around it. There's ways to make it easier. There's ways to make it very, very, very structured. There's ways to simplify the complexities without taking away from the overall message, right? The overall context that's being taught, which is something I hate when people do, right? They try to create or say they created stuff and don't give credit to this amazing mentor that we have named ICT. Those same people that try to do that, guaranteed, are not profitable, and they're selling a course. They don't do these types of things. And if they do, they blow their account constantly. They're overtrading, showcasing to the world how horrible they are while lying to your face. Just unbelievable. Like some go through great lengths to just be liars. And then they're not thinking about the person that's on the other end. They're not thinking about the damage and the illusion that they're giving people. And then eventually, like, this industry has the highest suicide rate, right? One of the highest now, right? There's a couple others at this point. but it has one of the highest suicide rates trying to be a full-time trader, because we put all our dreams and aspirations into this, and there's so many people that just lie. Imagine trying to get under someone's wing for 3, 4, 5, 6, 7, 8, 10 years just to find out they were lying the whole time. And now you wasted all this time, all this money, and you've gotten nowhere. Just imagine. That happened to me for almost, 6 months. And just that was devastating. I was like, dude. And I'm not that old, right? So I realized that real early, that there's snakes all over the place. There's these freaking scammers, like insane psychopaths, just trying to literally siphon people's money and be scammers in a time when people just need hope and leadership and somebody to tell them the way it is and not lie to them. So I try to lead my community. I try to present myself in a way that, I'd like majority of mentors, to carry themselves in this industry. My grandpa always said, you have to be the change you want to see in the world. So that's kind of how I view this. When I get on here, when I'm talking to you guys, some may find some stuff boring, and that's okay. Right? Remember what I said, trading isn't for everybody. Right? Those of you that have stuck with me this whole time for the last 2.5 hours, or maybe even just the last hour, you've seen what happened. That was an opportunity that formed. One SD in the comments took a trade and smacked a TP. Thought independently, but trusted what we were talking about context-wise. Those that left early, those that get bored quick, can't focus for 20 minutes, they're not going to get the results they want. They're not going to be able to see the fruits. Just because someone doesn't take a trade in 5 minutes doesn't mean that there's not going to be any value. And unfortunately, that's another issue. Not only are the mentors issues in many cases in this industry, but that the expectations that some students have, they've been so tainted that they don't even allow themselves to have the opportunity to be exposed to the right information. It's like, they have to have like a massive following, and they have to be flashing their bank account and riding around a Lamborghini just to have people pay attention. So there's an issue on both sides. But then there's people like you guys that have been sitting here. There's people like those that are in my private community who I have a huge affinity for, and I hope a long-lasting relationship with, that are going to be the ones that lead and be the change that we want to see in this industry and in the world, And I hope that one day when you guys do become successful, you try and pull the next man up too. This has to mean more to you than just making money. That's why I never quit. I have a picture of my daughter sitting to the left of me on this desk. And every time that I felt like quitting, every time that I felt like, I'll just never get this, I don't know if I can do this, I look and I have a reminder every single day. What's that reminder for you? Right? Who are you doing this for? We let ourselves down easier than we'll let somebody else down that we care about. So make this mean more to you than just candlesticks moving on a chart trying to make money. That's a byproduct of you mastering the skill set. What's going to hold you through so you can have the time and give yourself the time to master the skill set to finally reach the goals you're aiming for? Right? These are questions I've had to sit and ask of myself for years at this point. And even in the darkest moments, I never thought, I'll never be able to do this, because it's bigger than me. My reminder and the why that I started trading for is bigger than me. It's impossible for me to quit because what I know is possible. And you spend enough time here, it's going to be impossible for you to quit as well, because you're going to see what's also possible, not only just from what I'm doing, but what you're going to be able to do as well. Because I promise you it's not complicated. I dropped out of high school. Like, I was homeless for years with my family. Never went to college. Not some genius, right? I'm just a normal person. A normal person that refuses to quit and knows that we're all here for a reason. So yeah, I wasted $2,000 as well to someone who only teaches. Yeah, it's a clown show. These people, it's unbelievable. It's unbelievable. Regurgitated nonsense that doesn't even work. Like none of these people that most let's just say most, because there's a lot of people now from the ICT camp that go live and are really, really good, right? But most people are just freaking clowns. Like, it makes me sick that people would try to victimize people the way that they are in a time like this, and in such a time as this. It's insane. I don't know how they sleep at night, because I can easily whip up a course, flash a bunch of bank statements, and do all this crap and try to attract all these people that want to get rich quick. I could easily do that. I don't want to teach those people. Now, if they want to switch their mindset and come and actually try to learn and be patient and actually want to be a trader and deal with the boring things that are necessary, that eventually they're going to have to face in general if they want to be successful, then, I'm more than happy. My attention, and willingness to teach is open for everybody that wants to lend me their ear, that believes in themselves, that truly has a passion for this industry. I'm more than happy to help anybody and everybody, whether it's on YouTube or whether they feel inclined to come and invest in themselves and invest in me to be their mentor and, join the community that's, growing, But either vehicle that's chosen, I do my best to give as much value as possible, right? And those that are here to sit and willing to listen, and sit through the slow times and be here to celebrate the good times, those that sit here deserve all the help and deserve all the respect. And just like you gave me flowers, you guys deserve your flowers too for sitting here wanting to hear this type of conversation, wanting to be exposed to this type of perspective. Because most don't. That's why most fail, whether it's in this business or any other business. It all starts inside your mind. It starts in your mindset, and how you cultivate that mindset, how you learn to deal with the issues, it's going to directly, how you live your life, to be honest, will dictate, in many cases, how far you will reach in this industry or in any other business. So you guys deserve the flowers too, And it just makes you want to throw up seeing you spent $2,000 SD. You spent $2,000 on someone that teaches the basics. Bro. That makes me want to throw up. And I guarantee you that ICT's free content, before he posted his mentorship content on YouTube, beats all the basic crap that people try to claim works, and it doesn't. Anyone that's profitable with retail logic, for the most part, that thinks the market is random, which is majority of those that trade regular retail logic, they're only profitable if they even become profitable, which is highly unlikely. They're only profitable because of their risk management. You can be a good risk manager and guess every single time, right? And be profitable. At some point. It may be a rough road. You may have to sit through a bunch of crazy roller coaster rides, but it is what it is. Now, if you have ICT concepts, you get the technicals, the fundamentals, the foundations, the mindset, the risk management, the real logic and how price moves in a repetitive fashion, how manipulation works, the why behind bias and why it goes up and down and what makes it invalid or valid, how to manage trades, how to target properly and why, what's high probability and low probability, when you should push, when not to push. And the list is, it just goes on and on and on with all the detailed piece of information you get from these beautiful these beautiful concepts, right? So that's the difference, right? And that's just a small, minute list, right? It's amazing, right? So I guess you could say I spent $12,000 my first year trying to learn how to trade, between education, which I didn't even need to pay for, until I got to ICT's mentorship. That was beautiful. I don't even count that as any money wasted or invested, right? That's just was necessary cost of doing business. But I lost like $12K doing shit for 6 months. That was so ridiculous. Blew all my accounts, drained my entire bank account at that time. I wasn't doing very well financially. Remember, I was homeless for years with my family, so we didn't have much. And so from blown accounts to education in the first 6 months, $12K. And I still never gave up, because remember, the reason why I started doing this was so I could be around for my daughter, be around for my family, and never tell them that I can't be there. Because some of my family work, and I mean to this very day, my mom works constantly, 2 jobs, refuses to only work one, wouldn't retire even if I forced her to. Right? It's just how some people are, right? But yeah, 2K is still a lot, whether it's 2K, 10K, 20K, 500, doesn't matter. It's still too much if it was wasted. And that's again why we gotta, or hopefully, we can all be the change that we want to see in the world, as well as in this industry. Whether that's you just posting videos of your executions, you don't even have to teach. You don't even have to be a mentor, But don't be closed off, right? If there is someone that is just starting out and needs some help, whether that's you pointing them to a resource, or whether that's you answering a question yourself. Be the change you want to see in this industry. That's the only way we could change the industry, right? We need more people thinking like this. That's why I gave you flowers, bro. You keep it 100, no brag. Yep. You got to. There's enough of that nonsense going on. All the bragging, just nonsense. They brag for no reason, because it's not the skill set that's made them all that money, for the most part. For the most part, these people that are trying to brag about their profits are not even making the money from trading. They may make a good screenshot, maybe 50,000 here, 20,000 there, whatever the hell they try to portray. What about the last 6 months? Did you do it live? Was there anyone there to witness the actual process? Or do you think that I should just take your word for it? Like, really? Right? I mean, there's so many people that have been exposed as frauds. It's unbelievable. And, it's insane. There's no need to brag. I don't need validation from other people. I have validation from the fact that I don't need to go to work. Like, that's the biggest brag I can ever show. I could live my life. And that doesn't mean I'm in a mansion. Doesn't mean I make $50,000 a month. But it's enough. And the biggest brag is the students that have came to me and shared testimonials to me that they've quit their job, that they're able to spend time with their family. That's more important to me than what the hell I can do. You shouldn't judge a mentor off of what they're supposedly showing you. Judge them on the way that they behave, first off, and the success of their students. That's why ICT is, in my opinion, the best mentor in trading that has ever lived. Because before he started showing his profits and how insane he is and what he can do financially, hundreds of thousands of students are profitable doing this full-time or part-time paying bills. Hundreds of thousands. If you go on the internet, on Twitter, you will stumble across hundreds of them in a day. If you're in the ICT sphere of influence, hundreds of them that prove it, whether that's through what I do, trading live and proving it, or whether that's showing their statements the way that some of them like to do. Either way, the proof is in the pudding. Either way, most of them are not bragging either. They're just showcasing what's possible, and it's something that's undeniable at this point, and it makes me proud to say I'm an ICT student, and it makes all the people that hate on what we do, it just mutes them entirely. And everyone that tries to claim this and claim that, and they don't show any proof, they just completely get ignored. And again, that's how we can also be the change we want to see in the industry, right? Just don't show any of these people that are living these ridiculous lifestyles that don't prove anything. Don't give them any attention. And tell your friends to tell their friends to not give them attention. Bring them to people that actually know what the hell's going on, that are, unless they're just trying to be entertained, then by all means, go watch them like a reality TV show. That's cool. To each his own, right? Live your life. But, for those who want to actually learn and be around, like, real value that could change your life, make sure the person at least does what we're doing here. At least portrays what's happening. Right? And that they know what the hell is going on. Been a good trader, but you open my eyes a lot when I see your posts. Nice. I'm glad that I can have that type of influence on you, brother. You spent 8 months trying to figure it all out to teach the same thing in 2 months and 3 days. Oh, wow. Yeah. Well, I'm glad you're here, SD, and I hope you have a good day. I understand you have to leave. Thank you for sticking along with me, giving me your ear. I hope you learned some stuff today, and we will be back either tomorrow, a little bit later in the day, or on Sunday. All right? So have a good day, SD. Oh, and it's 8 o'clock already. Okay, I have to go to a doctor's appointment. Totally almost forgot. But yeah, guys, I appreciate you guys that have hopped on and stuck with me. Yeah, and if you can't be here, SD, you can always watch the replay. And definitely follow me on Instagram at WMG Trading. And if you guys haven't subscribed yet, please do so. If you know any traders that you feel could benefit from what we do here, or just traders that want to have these types of conversations, definitely invite them to the WMG family here on YouTube. And yeah, so I hope you guys learned some stuff, got some value. I appreciate you guys. God bless you guys, and I will see y'all on the next one.